video, I am going to share with you my analysis of Singapore's banking sector and why it might be your best bet for 2025. Let's get into it. Hey friends, welcome back to the channel. I am Iggy here, and I've been covering topics such as stocks, finance, CPF, and basically everything related to growing your wealth. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers with over 800,000 reads. I've covered over 500 videos and over 250,000 watch hours as of September 2024. The big picture. You know, my friends, Singapore banks are really catching my attention right now, and I'm super excited to share why. So, the US presidential election is just around the corner, and we all know what that means. Market swings that can make your head spin. But here's the thing, Singapore banks might just be your safe house in this storm. I mean, think about it. During times of uncertainty, people often turn to safe haven assets, and that's exactly what Singapore banks are looking like right now. RHB just upgraded our banking sector from neutral to overweight, which is a pretty big deal. It's like changing your stance from meh to yeah, this looks good. They're particularly sweet on UOB and DBS right now, with UOB having a target price of $40.20 and DBS looking at $44 or $70. OCBC is keeping it neutral with a $16.80 target, but still, that's not too shabby. So, if you're looking for a safe haven from the market storm, Singapore banks might be the way to go. Why Singapore banks look solid? You see, my friends, bank stocks might not be the most glamorous investment out there, but trust me, they're like the unsung heroes of the stock market, and right now they're looking particularly attractive. So you might be wondering, Iggy, why should I care about bank stocks? Well, let me break it down for you. First off, these banks are like the bomb shelters of the stock market. When things get shaky elsewhere, our local banks tend to stand firm. They're like the steady Eddie of the stock market. And who doesn't love a steady Eddie, right? I mean, think about it. During the 2008 global financial crisis, our local banks were still standing tall while banks elsewhere were crumbling like a house of cards. Now, here's the thing. The US Federal Reserve is planning 4 rate cuts next year, which might sound like a big deal, and it is. But here's the cool part. Our Singapore banks have already prepared for this. They've put measures in place to protect their income, like building an umbrella before the rain starts pouring. It's like they've already weatherproofed their house before the storm, and that's music to my ears. I mean, who doesn't love a company that's prepared for the unexpected? And let me tell you, our local banks have been doing this for decades, so they're not exactly newbies to the game. They've seen it all, and that's exactly why I'm so bullish on them right now. The money-making parts and dividend story. You know, my friends, when it comes to our local banks, people often think they just make money from lending and interest rates, but that's not the whole story. They've got a whole other side to their business that's been raking it in this year. Their non-interest income. Think fees from wealth management, trading, and other services. It's like the icing on the cake, and boy, has it been sweet. And the best part? 2025 is shaping up to be even better if investor mood stays upbeat. I mean, who doesn't love a good wealth management fee, right? It's like getting paid to help people manage their money. Now, this is where it gets really interesting. For 2025, we're looking at a potential 5.6% dividend yield from these banks. That's like getting paid to own these stocks. I mean, can you think of a better deal than that? DBS is particularly interesting because they've promised to keep increasing their dividends. They're like the gift that keeps on giving. But don't sleep on UOB and OCBC. If things go better than expected, they might surprise us with even bigger dividend payouts. It's like finding money in your pocket that you didn't even know was there. And let me tell you, in today's market, a steady dividend stream is like gold dust. So if you're looking for a steady Eddie in your portfolio, our local banks might just be the ticket. Looking into 2025. You know, my friends, the numbers are looking pretty sweet for our local banks. The banking sector is expected to grow its profits by 7% in 2024, which is like getting a nice little bonus. And sure, 2025 might see things level off a bit, but that's after a higher starting point. Think of it like climbing stairs. Sometimes you need to catch your breath on a landing before going up again. It's like our banks are taking a little breather before continuing their upward climb. And let me tell you, a 7% profit growth is nothing to sneeze at. That's like finding a $100 bill on the street. Now, let's keep it real, my friends. There are some speed bumps ahead, and I'm not talking about the kind you find on the road. Banks might make a bit less money on loans due to interest rate changes, which is like getting a tiny scratch on your car. And the global minimum tax rate could take a bite out of profits, which is like having to pay a little extra for parking. But here's the good news. Loan growth is picking up, fees are healthy, and credit costs are getting back to normal. It's like our banks are getting a tune-up, and they're ready to hit the road again. With a 7% profit growth, they're like a sports car speeding down the highway. My take. And there you have it, folks. That's my take on why Singapore banks are looking like a sweet spot right now. But that's not all. If you want to know more about making smart investment moves, be sure to check out my video on CapitaLand's 90 beta China exit, smart move or mistake. I dive into the details of their massive portfolio shift and what it means for investors like you. Trust me, you won't want to miss it. So go ahead and give it a watch and let me know what you think.